In 2018, the South African Reserve Bank initiated Project Khokha, exploring the potential of distributed ledger technology for interbank payment settlement. Joining us today on Zoom to unpack how this initiative aims to change the country's financial infrastructure is Monica Singer, advisor to Consensys Software. Monica, thank you so much for joining us.
Thank you. Thank you for having me.
You have a long and distinguished career in South African finance and a passionate advocate for blockchain technology. For those unfamiliar with Project Khokha, what is the core idea behind it?
It was such an amazing project. I never understood why the Reserve Bank chickened out, because it was successful, but they felt that they had to wait for the rest of the world. We would have been the first country in the world to implement it. So let me tell you the incredible thing that it did. When every night in the interbank settlement system, when you think that let's say you bank with us, I bank with Standard Bank, and I send you the money doesn't arrive in your account until the next day, because the Reserve Bank has to square off all the accounts interbank. The way it does it is that it requires every bank to put collateral to the Reserve Bank, and it does a batch processing system that takes the whole night, and then in the morning, like when I was the CEO of the Central Securities Depository Trade, in the morning we would get a message saying the interbank settlement happened, now you can do the transfer of ownership of the shares. But do you understand that all that money gets stuck in the banking system overnight, doing nothing? And it sits in an account at the Reserve Bank. So we came in and we said, in blockchain technology, which is transparent, is real time, it is inclusive, we're going to prove to you that we can do it intraday during the day, so that if you bank with us and I bank with Standard Bank, we can really do the transfer intraday, final and irrevocable. And we did 70,000 transactions in 2 hours. So we cut the transaction time by 75%, plus all the costs, plus all that batch processing, but plus all that waiting and people and blah, blah, blah. And it had full privacy, which is one of the biggest negative criticisms that the central bank currencies have. And this is called the central bank digital currency in a wholesale. It's wholesale because it only affects the banks, it's interbank. It doesn't affect the retail clients. So it was successful, but it was shelved, and I thought it was very sad that it got shelved.
Monica, you've touched on how the initial objectives of Project Khokha was to replicate functions of the South African real-time gross settlement systems on DLT. How successful was the replication, and what were the key learnings regarding performance scalability and confidentiality?
So we proved that it was confidential. We proved that it can be done intraday. Nothing has ever been done intraday in the world. This was a massive, we're talking 2018. Just remember, in 2018, people were not even thinking about anything relating to blockchain. They were freaking out about it. Actually, I gave a presentation to a conference of all central bankers in 2018. I said, guys, you will see that the use of cash will reduce, because as we implement blockchain technology and retail central bank digital currencies and other currencies like crypto and stable coins, people will start using those currencies and not cash and paper and, fiat currencies. And I was right. If you have a look at the trajectory, now this year we are having an explosion of stable coins, but I still believe that central bank digital currencies are important. Why? Because it's a liability on the central bank. Do you realize how important that is? Because today, when you open an account in a bank, your money is a liability on a commercial bank. If that bank goes under and there's no protection, you lose your money. But if you have a retail CBDC, you will never lose the money, because it's backed by the central bank, which it can never fail. So it is an amazing currency. The reason why, for example, in America, the Republicans having this incredible anti-CBDCs is because they haven't truly achieved privacy. That means that they're scared that the central bank will know when you're buying beer or prostitution or anything you do with your money. So people don't want to tell the central bank what they do with the money because cash is super confidential. So they're saying, why should I let the central bank know? But the protection that you get as a depositor compared to depositing the money in a bank, it's far superior. And the problem that I see, and my concern personally for the central bank, is that people will start using stable coins, which is a privately issued money, not by the government, and therefore that means that the central bank will slowly but surely start losing power. It will lose power in monetary policy, in financial stability, in payment efficiencies, because people will start using private money called stable coins. And therefore, I think that that's a loss of power that no government should allow to happen.
But if integrated with cross-border payment systems, how might this reshape trade for e-commerce SMEs selling into SADC markets?
It's not only SADC market, anybody using the internet. The beauty of what, the person that created Bitcoin, it's a pseudonymous Satoshi Nakamoto, what that person was trying to achieve, we don't know who that person is, could be many people, I don't know. What it was trying to achieve was to say, let's have one currency for the world. And therefore, there's no borders, there's no regulatory arbitrage, there's no costs because it's super cheap. It's like an email. So for the first time in history, when this paper, the white paper on Bitcoin was released in 2008, it created the paradigm that you could now safely transfer money in the internet, cross-border any country, not SADC, any country in the world. And that's what you want. You want to be able to send rands anywhere in the world. And many institutions have achieved that. If you study what, for example, one of the first ones was JP Morgan, they invented their own coin so that when they did transactions around the world amongst their own banks, their own bank branches around the world, that they could transfer this money like email without having to worry about the forex fluctuations. And this is going to be the norm into the future. Because what we have today, which is these intermediaries, this batch, SWIFT messages, super regulated for no reason, when you could eliminate the intermediaries and go peer-to-peer, all that is going to happen because it's the logic that this technology will bring you. Plus, let's not forget, it gives you a ledger that is completely transparent. It ensures that nobody can cheat, ensures that there's no fraud. And isn't that what we want? We want to eliminate fraud, but people don't want it because it's too transparent. And therefore, people are not so used to not having fraud in the system, But I think that eventually the forces of nature, of this incredible innovative technology will prevail.
Monica, thank you so much. We'll have to leave it there, and I'm sure we will revisit this topic. Thank you for joining us.
My pleasure. Thank you for the opportunity. Take care.
That was Monica Singer, advisor at Consensys Software, unpacking the potential impact of the digital rand on South Africa's e-commerce and SME landscape.